The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, feeling good. Let's take a quick look at what's happening here at Philadelphia, Pennsylvania, at the offices of Duke & Duke, 100 South Broad Street. And we're going to take a look at that German DAX. As you can see, we had a little bit of a sell-off here, but the one that's the most interesting, I think, is the FTSE, because it's had a big drop. I mean, it's had a whole I wanted to see the FTSE up here. There's the one I wanted you to see. You see in just that a few days here what's happened. Now, a lot of that is related to the usual Chinese stuff. Last night, I happened to be sitting here chatting with John, and we were watching Bloomberg, and they came on and said that the Chinese government had decided to peg the yuan, the renminbi, at 6.9 something, and it had been trading at 7011. 7011, and of course the market, the Dow Jones, the S&P, and the Nasdaq all exploded to the upside. And yet today, when you look at the cross rate between the euro or between the yen, it's still trading above 7. So even though they pegged it, the market is taking the peg and saying, take this job and move it someplace else, because they're not believing it. So there's still some type of a trade war going on, at least in the foreign exchange between the Chinese and the U.S. Remember, folks, years ago, I'm talking 20-some years ago, the renminbi or the yuan was trading at 12. And from 12, we went to 5, and now we're back to 7. So, this is not a big deal. But the public, because Trump hasn't done anything wrong in the last 36 hours, has to use something to put in the news, I guess. So we'll see. Anyway, that's what we're looking at here this morning, and we'll take a quick look at it. But something big did happen yesterday. Of course, it always happens, but something incredibly big, and I think it's important, and I'm going to share it with you, and you're going to have to do some of the work yourself here. But this is the big daddy rabbit of all the futures, folks. This is the Treasury notes, and it goes back to 2009. And you can see the different patterns that are there. This is weekly, of course. You can see the ABCD on the downside that happened down there in September of last year, and you can see where we are now. But what we hit yesterday during that, when the whole world was coming to the end and the Dow was down 890 points, the new notes hit the exact 786 number to the tick. Now, if you'd like to do something for yourself, why don't you do this? Why don't you pull up the Treasury bonds? They're about 1/6 the open interest that you have in the Treasury notes, but they're the most volatile. And check and see what that number was in the Treasury bonds when it hit 16131. Just take a look at it. Defy human nature. Humor the old cowboy. Do the work yourself. And by the way, if you have any questions, you can call in 877-927-6648. But you're going to have to wait a few minutes, because Al just told me the board is lit up like a Christmas tree, lights flashing everywhere. So if you do have a question, let me know what you're looking at. Folks, we've been watching natural gas for a long time, and if anybody should be able to talk about natural gas, it has to be me. But let's take a quick look at it, because we are getting really close to a really good bottom in natural gas. We've tested it several times now, and it's looking like we're getting ready for a heck of a move. Let me get this up here to show you what we're watching here. We've got a really nice butterfly pattern that is formed down here. We went down and touched it 3 times now at that 2007. We're now trading above that somewhat, which is good, telling you that the bottom could possibly be in. So this is one we've got on our watch list, and there's 2 reasons for doing it. One is natural gas has a tendency to trend for a long time once it starts to move. So if we do get this movement, I'm going to plan a little campaign for the 24/7 people where we can start adding contracts. Some of the research that I've done here with the help of my friend John Jameson has just been, we have a expectation when you do something, folks, and you say, gee, if this would work out, I'd really be happy. Well, it's went about 10 times that level, and I want to try it in the natural gas if it to see how it moves here. But anyway, we're going to keep a close eye on this natural gas because it's at a low level. And if you'll remember, the long-term weekly chart on that is right at the 786 down there at that 205. And just recently, we were up at 245. That's when Mr. Z, was warning us about the pattern being negative because of the lower tops. We also happened to be looking at a perfect Gartley when it was trading there at 250. And now that we're 50 cents lower, what we want to do is to see if this is making a major bottom in here, because it has the potential for something really big for three reasons. The first reason is the fact that it's completed this on the daily, the really nice butterfly, A, B, C, D, just absolute textbook. The number from A to B is perfect in time, C to D perfect in time, also perfect in price. The 1.27, 1.618 all came in at 206. And the 78% level on the long-term weekly charts comes in at 206. So we got just a lot of things saying that this may be a bottom here in the natural gas. But we're still close enough that we could give up the ghost, and it goes a lot lower, and you don't want to stand in front of that puppy. We've seen that happen, more than anything else. Another amazing thing yesterday with all the things with the Dow Jones down 900 points at one time, and the S&P down over $5,000, the NASDAQ down over $6,000. All of that's telling us that we're probably looking at something maybe in the future that might still be a little bit more to go to the downside. We don't know that, of course, but this rally back is going to give us a pretty good idea of what we're watching. So we definitely want to watch this very closely. But these are just a few things that we've got on our plate today. We'll have Bill Meridian as our guest on Friday, and he's always very interesting. And of course, Bill is become a super bull in gold right now. And of course, gold went nuts yesterday with the Dow being down so much. Silver didn't, take off as much, but the gold did go. The gold went up and took out those old highs. Right near the 1.618 expansion, and that's it. Regarding Hong Kong, folks, we're in contact with our friends and neighbors over there, and it's not very much fun over there, but now they're getting a little bit scared. At least that's what they're telling us. And the reason for that is, folks, there's 20,000 troops of the Chinese Liberation Army. That's the big boys, the Navy SEALs of Asia. They are in Guangzhou, which is exactly 35 minutes from Canton Road, which is in the heart of Kowloon. And believe me, they can be there in those little helicopters very, very quick. And they will put a kibosh on anything that those folks in Hong Kong have, because they're throwing rocks in bottles. And folks in China, they do things differently there. They really do. If you've ever been to China, the first thing you see when you get, like when you go to the United States, welcome to the United States of America, I always get goosebumps even when I talk about it. But when you go to China, they don't say that. You know what the sign says? If you sell drugs, you're going to die. So if you want to sell drugs, the death penalty is mandatory, and they don't take any prisoners. So these guys are not gonna fool around. They'll use the old get their attention type thing. Anyway, yeah, there's no ACLU. You got that right, Jim. No.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've been asked by several people to bring up the Bradley model that we look at here. Now, this is a simple Bradley model. This is nothing other than the exact formula that Donald Bradley used. This is produced by Ensign Software. John and Howard Arrington do it for me. I get a year in advance. Well, I get 2 years in advance. But as you can see here, from 2019 to where we are going into 2020, this is what the forecast is for. Remember, this is all based on cycles. It's all based on, planetary things. There's 10 planets. They weight them from the work that was done by Dr. Burr out of Yale University. And it's astrophysics type stuff, the valencies, and it's 10 times over my pay grade, but all I try to do is to look at what these numbers are. Now, all I've done with this is this is a daily. Now, I've moved it over 1 week. In other words, if you looked at this, the actual Bradley date is the 10th, but I moved it over 1 week. And the reason why I did that is that if I move it over 1 week, it catches the high of 0.1, it catches the high of 0.3, it catches the low of 0.4, and the high of 0.5. I mean, that's the mother god and country. 3 drives to a top, you've made a new high, a double top, 1, 2, 3, 4, 5, expanding triangle, reverse point wave. I mean, that's everything that you're looking for. And the fact that we gapped down below that 382 here yesterday is a very, very important thing. And the fact that, the market sold off quite a bit, it remains to be seen. So you have to think that possibly this could be correct. Now, Bradley's book is only 47, I think it's 47 or 48 pages. He wrote it in 1946 with a prediction for 1947, and it was absolutely spot on. And, Dr. Ruth Miller showed me this when we started writing the book, Astro Cycles, A Trader's Viewpoint. Twentyman, fortunately, was really good in computers. We're talking 1986. And Jim knew astrology, too, so we were able to reproduce these. And we went back and we looked at all of the Bradley models from 1886 through the present, which was 1986. So it was 100 years. And the reason why is we took 10 years after the Civil War. That's when we really started getting good stock prices and even a few charts in the New York Times, long before the Wall Street Journal. But the New York Times was printing these types of things. This was before, long before what was his name? Larry Livingston. Come on, yeah. Oh dear, come on. Evermore. Jesse Livermore. And so this is because these guys were working off ticker tapes. We didn't have charts like this. Anyway, we tested it out, and it was really spectacular. And when I saw that I could do something like this, I started a newsletter called Astro Cycles. I started it in 1987. And it turned out to be really popular. I did it all the way through 1992. 1992. Then I got involved with artificial intelligence, and I just didn't want to do the newsletter anymore. And so I just let it die its normal death and told the folks, this was it. And I'm glad I did, because back in those days, we didn't have the computers to do all this stuff. I had to take it into a printer and all this kind of stuff and mail it out, and it made good money, but it was an absolute nightmare. But getting back to the Bradley model, folks, it's cycle based. It's based on astrology. Astrology is nothing more than numbers, and there's nothing esoteric or scary about it at all. In all my years of doing this, I've only gotten 1 or 2 pieces of hate mail. Well, actually 3. 2 from my ex-wife, and 1 from a lady out of Connecticut. And she said I was an instrument of the devil because I worked with astrology. And I wrote her back and I said, young lady, I said, you're absolutely true. I am the instrument of the devil, but not for the reasons you're thinking. And anyway, she was the only person that really complained about it. But it's just numbers. If you look at all those different planetary things, and if you've ever listened to one of my webinars or one of my speeches that I give, I always show some of the cycles out of the Little Book of Secrets by William Daniels that shows how all of these ratios are related to these planetary phenomena. And that's exactly what Albert Einstein was doing when he found the theory of relativity. He was watching Mercury, and he could tell the bend of that, whatever the universe stuff happened, was because of the eclipse and how it reacted to the planet Mercury. At least that's what I was told. I didn't actually help Einstein doing the theory of relativity. I gave him the original idea, but he was able to run with it. That's right. I was 15. No, how old was I? No, I was 6 when I told Albert how to do that. He died when I was in high school. I believe it was 1955. Anyway, folks, I'm just telling you that there's nothing to be scared of this stuff, because it's just numbers, and it's all probability based anyway. That's all it really is. You think you got something, and until you got something that you can actually understand, you don't have anything. And that's the whole key. You got to understand the main cycle of all, folks. And that's the easiest one to do. And that's the 9-inch cycle, the cycle from your left ear to your right ear. If you get that one right, the rest of it is a breeze, an absolute breeze. I sat here for 3 years with Mark Douglas by my side, and I watched how the mental part of trading was so very, very important. He had interviews with all these traders. Some of them you've heard their names before. They would come in and visit Mark for a day, sometimes 2, sometimes 3, and the information that Mark got from these guys. And I'm sitting here with my ears open, just listening, to the stories of, how they made so much money, then lost so much money, and all the stuff that they went through. I mean, it was just, it was really amazing. When you boiled it down, it's that 9-inch cycle between your left ear and your right ear. If you get that one right, the rest of it falls together. If you heard the story about the little girl that puts a puzzle together and she's doing it upside down, and their dad comes in and says, "What are you doing? You're doing a picture of a puzzle, and it looks like a picture of the world. You're supposed to be doing a picture of the man." And she said, "Daddy, I figured if I got the world right, the man would be okay too." So that's something to be said. Yes, I used to work with Pythagoras in his office there in Greece back in 666 BC in my other life, and then I had to move on, to help solve the problems with anthrax and I helped develop penicillin also. What else did I do? Let me think. Now that's main things. Oh, of course, I helped Newton with the theory of what was that? We were with the apples. Oh, with gravity. I helped pick up the apples that fell out of the tree. Folks, I'm tired. These markets are keeping the old cowboy up all night, and I am going to do my very, very best to get a good night's sleep tonight, because we are going to see volatility in these markets like you cannot believe. Yes, that's right. Marshall, God love you. Marshall has finally figured it out. I was the main developer of BS. Thanks for making me laugh, Marshall. God love you. I owe you a margarita. Oh, boy, that's good. All right, let's we got a break coming up. Saved by the bell, thank God. We'll talk about the markets here in a little bit, but it's important to remember, folks, get that cycle right. You get that 9-inch cycle right, the rest of it's all baloney.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I owe a debt of gratitude to David White here at the Den here in TFNN. He's put a couple of quotes in that are really great. One is from Benjamin Graham, the guy that Warren Buffett idolizes. And the essence of portfolio management is the management of risks. not returns. And the second one was from Carl Sagan. It pays to keep an open mind, but not so open that your brains fall out. I really like I really like that. Oh, now we start talking about Yogi Berra. That'll take us up through the end of the year. Let's take a look at this Hang Seng Index, folks. This was as of Friday. We've had a really bad day the first 2 days of the week here in the Hang Seng. We're down near 25,000 now. You can see it gap through these and just totally fell out of bed. Part of that is related to what's going on with the rioting and stuff that's going on, and the other part of it is, hold on a second, folks, as we usually do when the stock market opens, everything starts beeping, and that's what we wanted to see. Thank you very much. We're right in that ballpark here. Okay, let's take a quick look and see what's going on. Okay, there we go. All right, we're coming back here a little bit in stocks, as we should. We've had a nice little bounce. We're going to find out if we continue to have this bounce here. But we've had a really big break in stocks, as you know, down to almost 1,000 points. We were down almost 1,000 points in the Dow, and we've taken about 700 of those points back this morning. So those are a few things that we might want to to watch as we go through the day here to see how these things unfold. Okay, let's talk a little bit about the foreign currency situation with the Chinese renminbi. Folks, the China has been ripping us off for many, many years. I've been going to China since 1994 was my first year. I continued it for 12 years up until 2006 when the Merck, stopped their program. And so the main thing that I think we got to remember is if you've ever been there, you'll realize that they basically copy everything that you can possibly, not just jewelry and clothes and stuff like that, but records and things like that. And the quality of the records and the computer stuff that they had was absolutely terrible. I mean, most of that stuff didn't even work at all. So those are things that you might want to remember. What we're looking at here. So I've got to do a couple of quick things here, and then we will be ready to go. And let's keep moving on here. And there we go. Oh, boy, this is wonderful. Hold on just a second here, folks. I have to do I have to change a order here, and then I'll be right with you. And then we'll be ready to go. Okay, that's good. This is great. Okay, let's move on to the currencies. Folks, the British pound has held these major lows down here at the level that we were watching that was so extremely important. That was that level at 120.60, and the pound is held above that level and for several days now, and that's actually a pretty good sign. So if it's able, to get in and to do that, then you've been able to I'm trying to think and do two things at the same time, and when you're Italian, you have a hard time doing that. Folks, I love talking to you, but you're going to have to be silent for a minute. I've got to change an order here, and if I screw it up, I'm going to be mad, and I'm going to be ending up not being happy today. And I know you want me to be happy, so give me a few seconds here to go in and make a slight change, and then I will be ready to go. Hold on just a minute here. Okay, there's where we want to be. Just give me a second. There's where we want to be. Hold on, I'm just looking at something here. Hold on just a minute. Only take a second. Okay, now we can start having fun. All right, let's move on here to the next one. I've got to do one other thing. If you guys, if you want to make me work, why don't you do something different and send in a question? This would be great. Help me do this show a little bit. You know what I'm saying? Whew, look at this. This is just unbelievable. How does it know it? Yeah, you're absolutely. That's where I have my order setting in there. Hold on just a minute here, boys and girls. I got to get this moving to see where. There we go. Let me. Sorry, have to do a little bit of housework. That's the main thing. We want to keep this thing up and running. Okay. Any questions? Let's see if anybody's got any questions for us. Yes, today is Tuesday. Now, newsflash: tomorrow will be Wednesday. The 4-hour for the ES chart for Z. Mr. Z wants the 4-hour chart. Terry's asking a question. Can you short the Hong Kong currency? You can, Terry, but it's pegged to the U.S. dollar at 7.75, 7.85. That's not a. I don't think that's a bona fide trade. That's really what what I think is going on. But I would not mess with that. So I don't think you can short the Hong Kong. You can short the renminbi in the foreign exchange, but the Hong Kong is actually pegged to the U.S. dollar. That's been going on since they took over in 97, I believe. That's when you could buy real estate for the price of a package of a candy bar, and it's a little bit more than that now. Okay, let's move on here to the next question that someone had. Terry, Kyle Bass can do that. Now, let me explain to you how you can do that. You can go in a Hong Kong bank, and you can sell that currency at 7.75, what it's pegged at. Now, what he's betting on it that the peg is going to change. And if he's right, he'll make a lot of money. If he doesn't, he'll lose a little bit in transaction costs. But it's because it's pegged. The only way he's going to make any money if they change the peg. And, they've never done that, but that don't mean they can't change it. I mean, this is what these markets do sometimes. So anyway, those are a few of the things that you got to keep in mind of, what you're watching. Okay? I just want to let you know that's what we're paying attention to this morning to see if it's going to help you a little bit. But it is pegged 7.75 to the dollar. And that basically means if you buy $1, you're getting 7.75 Hong Kong dollars. So if something's selling for $49 Hong Kong, that means it's selling for $7. So it's quite simple. When you go to China, it's all done in renminbi, and in renminbis it's 7, and the U.S. dollar, you just take $7 makes 1 renminbi. Or 7 renminbi makes $1, and if it's 7 renminbi, it costs $1. That's basically it. So anyway, let's move on to the next thing. But China has been the intellectual property rights and the things that they take from us without paying, all books, any type of computer property, all that stuff, they've been taking from us, and Mr. Trump has put a stop to it. And people that do business in China realize how important that is. So it'll all work out. Hey, this is going to be okay. It's not the end of the world. At least I don't think so. Okay, let's move on here to a couple of things that we need to have also to cover here, and that is the gold market. I think I've mentioned the gold market. We had that big run up, and that was a big. Very good, David. Keep me. What do you call it? Focused, David. David says, "Can we panic now?" Yeah, no, never have to panic. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, I posted a chart as requested by one of our listeners on crude oil. What I'm doing is you're looking at a shorter term chart here. I believe it's a half-hour chart, and you can see that there's a potential ABCD pattern forming here in the crude oil. But one of the things that you should do when you're trading is if you should look at several different time frames. And probably the best way to do that is to start out with the daily. And as you can see, if you do that here with the spot crude, September, we're trading at 55.05, and the low that we made down here the other day was right at a 78% level, so that held, and now we're seeing whether we're going to have a little bit of a rally. So you move your daily chart down to 240 minutes, 4 hours, or 60 minute or 30, either one of those. They all tell the same story. And then try to find a pattern that fits within that time frame where you think it's going to bounce from. That's really what you're doing. You're trying to line up price and time together to find an entry point that's going to give you a better chance of winning than losing. And that's what pattern recognition swing trading is all about. There's nothing magical about it. Sometimes they're going to win, sometimes they're going to lose, but more often than not, it's going to get the odds in your favor, and that's really what you're trying to do when you're looking at some of these charts. So pay close attention to that. It's not an easy gig to do, but once you get it done, you should be okay. So let's take a quick look here at another one that we want to be watching here, and that is hold on a second, and I'll get it up for us. That is this dollar index. We talked about this making a major top up here at the 3 drive to a top pattern. That has certainly been the case. Anybody that's watching the euro, we moved 140, almost 200 pips off the bottom. We made a low at 110.30. We got up to 112 and change. That's a 200 pip move in a matter of a few days when the whole world didn't want it. And now everybody does want it, so be careful. All I know is that if we get above that 113.50 level in the euro, this thing could really go, because the numbers that we've seen on the long-term daily, I'll bring those up again just to remind you where we are. Hold on just a second here. Okay, here we are, euro, A, B, C, D. Here we go. Here's the euro. I'll bring you up, and you'll be able to see that number we were watching down here, and we've already got the big thrust of this. We've already gone way above our predicted high of the BC swing, at 112. We've got up to 112.40, and so now you're going to be looking at a move that gets above 113.40. This euro could really scream, and that means a U.S. dollar would be in big trouble. And that could mean that maybe this trade war is going to be over. So who knows? We're going to be seeing. Yes, David's talking about it in 1990. It was all about Japan. One of my most vivid memories of that time during when the Nikkei was trading at almost at 40,000. They were interviewing CNBC, and the cost of real estate in Japan had gone absolutely ballistic. And they took a $1,000 bill, picture of Grover Cleveland, and they set it on the ground in front of the Imperial Palace, and they said that this is how much land you can buy in Japan for $1,000. $1,000 bill, same size as a $100, a little bit bigger than a $100 bill, because these were older bills. You can't find them anymore. They sell for about a $3,500 premium if you can find one. But that $1,000 bill is all you could buy for real estate in Japan at that time. It's probably like that in Hong Kong now, but who knows? It certainly was that way in London a few years back, but London's been hit a little bit, and so it's backed off about 20%. So, David, do you see any parallels with China? I see the Hong Kong part as far as real estate, because you're talking $20,000 a square foot for really premium property, but just a normal piece of property is $10,000 a foot. To give you an idea, here in Tucson, for $100 a square foot, you can get the same thing and maybe even nicer. That something's wrong with that picture, folks. That's not right. But hey, this is what markets are made out of. Some people like chocolate cake, some people like white cake. It depends on how you mix it. But that's what you have to decide, is what the name of your game is. You're either a short-term trader or a long-term trader, but you got to be able to do it. I want to share one other chart that I think is extremely important, because this is a longer term. This is the chart that we got from John Murphy. I put it in the there are at least 10,000 Americans, expatriates, living in Hong Kong. Oh, there's a whole section of the city there over on what's the name of the street? Oh, not Nathan Road. I'll think of it. But it's a whole section, nothing but expatriates that are there. And a lot of them, are retired there, and they still have homes in the United States, but they live in Hong Kong's a beautiful place, folks. I mean, not counting what's going on with these wackos that's going over there, but it's an easy place to travel to. The food is extremely inexpensive. The travel is as cheap as any place in the world. I mean, you can get on a taxi or a bus or the MTR for $3 or $4 and go all over the city. And the only thing, and hotels are not bad, but if you had to buy a piece of property, that's what the problem is. You got these families that come in from China, and they buy a piece of property, and 5 families live in there, and they're living better in a one-bedroom small flat in Hong Kong than they would be in China, and that's the name of the game. Anyway, that's okay. Let's move on here to show you this chart by John Murphy. It's very important. All I did was draw in the 1, 2, 3, 4, 5 expanding triangle. The key here, folks, is that red arrow. This was as of Friday, and when the Dow was, S&P was 2,900. We're at 2,870 right now. We're getting back to that level again. But we had a big down move, and that scared a lot of people. Now, whether this fright is going to continue on, to some of the other things or not, I'm not really sure, but nobody else is either. So you've got to be able to try to simulate, what's going on, with some of these things, and pay a little bit of attention to it. So that's mainly what we're watching here this morning. I have one of my focus things today, of course, is the natural gas, because we bottomed here yesterday. We had a nice little $1,000 move, and now I'm watching to see how the market holds this level here around that 1206, 1205 level, 205, 206 level, because it's got a chance. It's in the developmental stages. That's basically what you're looking at when you're seeing that. So we want to be very, very careful before we decide to go into this market. The grain market's held up relatively well, given the fact that all of this stuff of the Chinese not buying things. Folks, believe me, they're going to buy it. They might have to buy it through Germany or Guatemala or Timbuktu, but they're going to have to buy it. That's neither here nor there. So let's remember that. That's There's 1.5 billion Chinese that have to eat, and they have a lifestyle now that they're getting very, very accustomed to because they're getting more westernized. And I think they have a 7-Eleven on every corner, and they have a Kentucky Fried Chicken and a Pizza Hut on every other corner, and a Starbucks on every other corner. So, they're getting acclimated to the Western ways, and they like it. And so, I think that's all going to work out, but it's going to take time. There are different countries and different values and stuff, but somehow we'll get through it. The main thing is we're not in a Cold War with China and stuff. We get along relatively well. It's not like it is with some of the European countries like Iran and Syria and Russia and a few other places. So let's take a break, wind up this show, and turn on the trading machines, put the hat on, and buy and sell, buy and sell, buy and sell.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and someone's asking me what was the most important chart that I posted in the newsletter this past week, and I think it would either be that John Murphy chart because it lines up with the other Dow Jones that we did, but also the second chart that John Murphy sent to us, which is something I don't follow, which is the foreign stock markets. And the reason why is, yes, you got that, Mr. Bill, 1155 is spot on, Bubba. That's a Gartley, and you got to like it there. You really do. Take a look at it. I like it. Anyway, let's take a look here. Thanks, Marshall. Anyway, this is a foreign stock market index. The important thing here is it hit that Fibonacci retracement level in September of last year, April of this year, May of this year, and again just recently. But the big drop-off that we had, and this being a weekly chart, was you can see what's happening. We're breaking down really badly in this. And this is the world stock markets. That's basically saying that the economies in all these other places are not near as good as what we've been seeing. And, of course, we've had a heck of a run in our markets. But I think this is a very, very important one to pay attention to. And, of course, the other one that was very important on the same theme was the emerging market. And if we take a look at that emerging market chart, you see the beautiful, pennant that's been formed there, and we gap down below that and, continue down sharply from that level, which tells you that this thing is really set up to go a whole lot lower if, in fact, that's what it's going to do. So those are just a few of the ones that we're watching. So I will be back tomorrow. So remember to live every day in an attitude of gratitude, and may God bless. And if you have any questions, have them ready for tomorrow. Make my job easier, folks, because, it's not an easy gig. I got to take about an hour or so to prepare for all this. And if you folks don't come through with some questions, it makes it hard on the old cowboy. And I don't like hard. I like easy. Easy and breezy. So live every day in an attitude of gratitude. May God bless. Hey, and do something good for somebody today that has a lot less than you.